Hey guys, so much requested follow-up video on Cleanspark. So I've done two before, sort of initial look at them and an update with the last quarterly results, and we've had the most recent quarterly results and the monthly update. So I thought I would plug them into my model, and yeah, considering it's my largest position now, it's good to sort of have a bit of a deep dive on them again. So it's come up to 1.9 billion market cap now after a chunky move, 60, what is it, 60% in the last week. And yeah, sort of a huge move since the bottom, sort of in the mid threes. And yeah, it's looking nice, but will it continue? That's the obvious question. So I've been putting everything I can into my model, and here we are. And it doesn't look all that juicy, to be honest. I will sort of explain a number of these figures. So this is sort of the some numbers from the most recent quarter, and then sort of I've estimated some costs of where they're going to be from April 2024, so after the halving. I do think it's important to take costs from after the halving, because obviously revenue is going to be cut in half regardless of where it is in March. So yeah, I've sort of taken some estimates of costs from the most recent earnings and where I think they're going to be, considering they're also going from 10 exahash to 20 exahash. And then, as before, if you want to watch the previous videos to sort of see where this was before, I sort of model this using different Bitcoin prices going forward, sort of where we expect the sort of the price to run up to over the next 2 years. And obviously using the same costs, this gives you sort of various different, escalating profit figures, or well, as you can see, it doesn't actually turn properly net profitable until $100,000. So they may report different figures to this, obviously, because they report sort of Bitcoin itself on the balance sheet going up and down in value, and sort of various other metrics. But this is sort of the way I want to measure it, just purely mining Bitcoin itself and selling it minus all your costs. So yeah, it takes quite a lot to go net profitable. So just to give a bit of backup behind these figures, so I've got the total Bitcoin mined along the top here, which is 5,521 for the year, so from April 2024 to 2025, and that comes from my sort of little calculation here. I haven't changed the market cap from what it was before. And yeah, so I'm saying 541 mined in April 2024, or sort of maybe that is May, the month after the halving, let's say. So that might have to sort of change to May. But that is sort of being starting from their most recent month of 666 Bitcoin. I've assumed that, well, because it is some of this Bitcoin mined is because of ordinals and sort of increased fees at the moment. That isn't sort of guaranteed. We had a spike up in sort of ordinal usage in May, and that sort of dropped off. So for the spreadsheet, I've dropped that down to 630, I think it was. And then obviously with the hash rate continuing to increase at a huge pace, sort of during the year it was like a couple of percent a month, and then sort of in more recent months towards the end of the year it's been 10%, upwards of 10% a month. So yeah, you've got to depreciate that a fair amount. So I've said 3% per month as sort of an average. So December would be a little bit, so starting from 630 because of a little bit of, I'm assuming without ordinals, 630, so to December, January, February, March, April, and that's annualized from April. So about 541 Bitcoin. They're going from 10 exahash to 20 exahash. So in theory, it will be double by then, and then you've got the halving. So essentially back to 541. And then from there, for the year, I was thinking maybe hash rate drops off a little, because we've got lower power miners, less efficient miners, which will maybe stop. But there's still an awful lot of new miners being installed, and you've got countries mining, you've got energy companies potentially mining because they don't care about the electricity price, they're already producing it. So there's still plenty that could be added to the network. So I've sort of had to obviously take a figure, and I've dropped this by 3% going forward. You could do less, of course, but yeah, so that gives you, going all the way through to March to 387 Bitcoin. You could do this by less. If you did it by 2% a month, say, it doesn't go down quite that much, then that gives you 5,823 Bitcoin per month, for the year. So, that ups that would up the figures if you change it to that. So at $80,000 Bitcoin, it would become profitable on the model then, and the $100,000 goes from $9 to $11.75 for Cleanspark. So it doesn't make a huge difference, to be honest, how much hash rate is coming on. That isn't sort of a huge variable, but changing that back to 3% just to be conservative, and that to 0.97. So yes, 5,521 Bitcoin. So that's where that comes from. You could call it a bit too cautious, too conservative. I would say it's sort of good to be cautious. It's 3% a month dropping off, whereas hash rate has been increasing by 10% recently. So you could say it's overly bullish that this much more hash rate won't come online. But you've got to take a figure. So I've done that. That's where the 5521 comes from. Then the revenue is sort of fairly self-explanatory. It's just 5,521 Bitcoin times each of the model prices. So 330 million, 440 million, and 552 million in revenue for the year. Then you move on to direct costs. So this was one of the things that I was wanting to ask investor relations about, and they haven't got back to me, which I do often find. I've asked a few questions of companies' investor relations teams, and a lot of people say they're sort of very good and they will get back to you, and I've sort of always found that they don't. But I did sort of a little bit of digging, and I sort of came up with this figure of 220 million in direct costs, and this is coming from the NiceHash profitability calculator. So they have a number of different miners. They've been sort of replacing some of the older ones, the sort of S19 Bitmain S19J Pros. They had a lot of those, and they were sort of 100 terahash. I think they've still probably got quite a few more. Some people have listed out basically everything they've got. I sort of haven't gone into quite that depth because the figures are always going to be changing. They've also bought some new S21s, so replacing these with S21s, that's sort of bringing the average cost down. But I've sort of taken 88,500 miners, which they have, about 88,500. So if we say 88,500 XPs at 4.8 cents per kilowatt hour, which is what they in their presentation say is total cost of power at an average, I'm guessing. That gives you an awful lot of income per day, of course, but yeah, in terms of profit, they are saying 596 Bitcoin after costs, if you like, $25 million a month. But more importantly, electricity cost $9.2 million per month. So this is at 10 exahash, 88,500 miners, 88,800 miners, gives them 10.08 exahash. So if I double the $9 million a month electricity cost, that would in theory get me to 20 exahash, and 9 million a month times 12 times 2 gets me to $216 million. So I'm guessing they have a little bit of other direct costs. I've just sort of rounded this up to about $220 million. And yeah, sort of using that as my direct costs figure. There might be sort of more to add into this, to be honest, but it already, with just that, has quite a bearing on the price. Whether they can sort of add more lower cost miners per terahash, better efficiency miners, then who knows? But I've sort of gone with that because they still have some of the old ones mining at the moment. They're not going to replace them all, of course. So yeah, I've gone with that as direct costs. Depreciation is a bit of a funny one because they are sort of depreciating their miners over quite a short schedule. I would imagine to sort of get the tax write-offs and bits and pieces that come with saying that you're losing a lot of money when they aren't actually losing sort of that much cash. They've obviously diluted shares to buy the miners, and then they're sort of showing quite a large depreciation figure, and that sort of trickles down to net profit. So I've taken the most recent figure off the Q3 earnings, and I've obviously times that by 4 to get an annual, and I've added 50%. So going from 10 exahash to 20 exahash, they're obviously going to have all the new miners that they've bought, and I've sort of thought some of these are going to be paid for over the next sort of 6 months or so, a year or so, and obviously the new ones then will be depreciating as well. But it's sort of difficult to get right down to the weeds of exactly how much they're going to put down as depreciation. They could of course change it as well, depending on sort of where they are figure wise, if they want to get a bit more of a tax saving if they're still losing money. So yeah, I don't think it's worth drilling quite down to an exact figure on that. As I say, it could change. So I've taken $131 million profit right across here. So that gives you gross profit, and that sort of comes to 90 million at $80,000 Bitcoin, and then a bit more at 100. So you then got general, admin, and stock-based compensation. They love their stock-based compensation. Obviously, they're not going to be just paying it out of revenue and sort of losing more money. So it's best to issue stock, as sort of growth companies would. And I've sort of taken the annualized figure and added 20% onto this. So obviously, going from 10 to 20 exahash is going to mean more staff potentially. To run the sort of bigger operations, but not that much more staff. It's not going to take double the staff. There will be economies of scale. Some people can manage, a larger exahash amount with not double the people. So I've only added 20% onto that, and that's $92 million. That gives you operating profit. Interest expense, they don't seem to want to be taking on a lot of debt, so I've just annualized the last quarter interest rates. It's only 2.5 million, so it's not a huge figure. Income tax is 30%. I've sort of left that as 30%. That seemed to be what they were posting sort of during the better times and sort of as an average. So that's sort of a gain actually when you're losing money, and then sort of finally goes to $32 million paid of income tax once you get to $100,000 Bitcoin. But obviously, as on these lower figures, we're not really interested in tax at all because it's showing a negative value on the net, so not exactly worth buying at all. And then net profit, as I say, it only becomes net profitable on the model at $100,000 Bitcoin. So then you've got the balance sheet side. This is factual, obviously, it's not opinion. Debt, they have 15.9 million in debt, from what I could see, 29 million in cash. The Bitcoin I haven't taken from the quarterly earnings because that's up to September, and we know from the recent results they have 2,575 Bitcoin as of November the 30th, so that's the most recent data we have, and I've then sort of assumed that that stays the same. Obviously guessing it won't, but I've sort of left it as that, and then multiplied that by the model prices, so that gives you sort of 200 million, 250 million at $100,000 Bitcoin. But for the sort of market cap or stock price basis, I've based this on the market cap rather than sort of netting off cash and Bitcoin, because most people are going to be looking at the market cap, and I've sort of assumed maybe maybe a bit harsh, but the intelligence level of the average crypto trader to be looking into netting off cash and Bitcoin and things. I don't think they're going to be doing that, so they're going to look at market cap. PE, I may have been a bit cautious here. I've sort of, assumed if we're at like 40,000, 60,000, they're still showing a net loss. People aren't willing to pay all that much for the stock. Obviously, if they're losing money, then it's always going to be negative price no matter how much you go to. If you say 25 PE, it just becomes a bigger net loss. Like, the figures don't work when it's negative net profit. But at $100,000 Bitcoin, they're obviously making a net profit, and I've shown, say, a 25 times earnings. If people are bullish, that gives you a $9.15 stock price. So not ideal. Obviously, if people are willing to pay more, could go to 50 times earnings. People are super bullish about Bitcoin and everything. It's what sort of people are now. It could give you $18.30. But I sort of like to keep fairly conservative. So that overall doesn't really look ideal on the face of it. When I'm sort of saying the $100,000 model price is below where we are now. I'm guessing the price will have gone down since then. Obviously, Bitcoin's dropped slightly today, and I'm guessing we're at $9 or something. Yeah, $9.34, 9.7% drop in pre-market because we're down to $42,000 Bitcoin. So brings you pretty much to my model price for $100,000. So there's sort of, as I say, a number of factors that go into this that could change. I'm saying increasing hash rate and from now until the halving and beyond, and also no ordinals sort of factored into there. You could get sort of fees continuing to spike into the bull market, and they get sort of more Bitcoin in fees and more sort of from ordinals and things. People paying huge amounts to mint new ordinals, and maybe you get a huge amount of hash rate sort of come offline at the halving, and sort of it doesn't, my mining amount here isn't quite right. So yeah, you could sort of change. If we focus on the $100,000 model, you could get sort of up to 6,000, say, mined for the year. That takes you to $13, so that improves things a little. you've got depreciation, which is probably a big one. This sort of is assuming that we're looking at net profit rather than sort of free cash flow. Free cash flow is sort of going to be different because depreciation doesn't quite come into it as much. They're still going to be making a lot of money in cash if they're sort of taking 600 million, direct costs of 220, and sort of general admin and everything, less tax. If you sort of if they also use a different depreciation schedule, they could sort of get to $60 million of depreciation. If they want to sort of say the cards are going to be worth they're going to be useful for a longer time. That's what sort of Intel have been doing. You could get up to sort of $19 if they ignore depreciation completely, and we're looking at just free cash flow. You can get to $24, but sort of using slightly more conservative figures, of course. That's where we are. What else did I have in my notes? As I say, the net profit this is probably not what they're actually going to be reporting if we get to 100,000, because they could easily have sort of $3,000-4,000 worth of Bitcoin on the balance sheet, and sort of within a quarter this could potentially have gone from $125 million to 250, or say 150 million to 250 million in a quarter, and then they would probably be reporting that as net profit. So instead of 100 million from selling Bitcoin, they would be reporting 200 million. Obviously that gives you near enough double the net profit. So then you suddenly get $25, if you're taking a 25 times earnings. But I don't like to think of that as profit. It's similar to, sort of strangely enough, Berkshire Hathaway. People sort of look at their net profit and it sort of violently swings because they have $300 million, $350 million of stocks, and when they go up, they sort of report it as a net profit, and when they go down, they report it as a net loss, which it isn't really because they haven't sold anything. So I wouldn't count Bitcoin on the balance sheet going up as net profit. So yeah, it's I'm sort of conservatively ignoring Bitcoin going up. Obviously, if we're saying $100,000, Bitcoin will have gone up, but I don't like reporting the profit on that. So yeah, maybe that is conservative. As I say, it's not actually what they'll be reporting, but it's what I'm reporting for the model. And of course, that is using the figure of what they have right now. So whether they'll, if they start going free cash flow positive and they don't need to be selling the Bitcoin, they could be sort of hodling more and more over the next year. They have been in recent months. They sort of mined 666 and only sold 400, I believe it was. So yeah, they could certainly be adding to this, and then that would sort of exacerbate the amount of profit that they would be making from Bitcoin going up. It could be 100 million from mining Bitcoin, and if they've got sort of 6,000-7,000 Bitcoin on the balance sheet and that's doubles, then they're going to be reporting $300 million profit. And then, yeah, maybe people sort of take that as profit. You could easily sort of get to $300 million profit and sort of be, 40 times earnings. Yeah, maybe sort of the stock would be $60, but I just don't think that's realistic to expect, really. Oh, and I haven't mentioned the shares outstanding. So in the last two models, I've had 150 million shares outstanding. It was at sort of just under 100 million when I did the first video, I believe, and I was sort of predicting 150 million by sort of the halving, and that has gone up. I think this is partly, I mentioned this before, partly due to them buying the additional machines to go from 16 to 20 exahash. But it could also just be, there was 150 million was never realistic with the expansion and sort of stock-based compensation. People sort of moan about that an awful lot. So I've increased this to 200 million. We're at, I believe, 183 at the moment. So that isn't too much of an increase between now and the halving. You've got 2 full quarters of increase there. I could change this to 225 million, say, and figures will sort of get even worse. But I'm sort of conservatively thinking they were saying like the expansion is fully funded now to get to 16 million, and yeah, maybe they need a little bit more, but that is at sort of 200 million shares. So yeah, the upshot is sort of it doesn't look all that good, really. Sort of as a realistic model price, I think, sort of between $10 and $13 if we get to $100,000 Bitcoin, and that is $13 is even with them mining a little bit more. So you do have to start to compare this to just holding Bitcoin itself. Obviously, if it were to go to 100,000, we're sort of looking at almost 2.5x from where we are now. Whereas Cleanspark is already sort of, what is it now, $9.30, so that would be sort of less than 50% gain. So in theory, holding Bitcoin itself could be more profitable than the miner, which is supposed to sort of, in theory, be leveraged Bitcoin, a bit like gold and silver miners are sort of a leveraged play on the metal itself. But whether sort of people have got a bit too irrationally hyped up on this recently, that could be the case. I do have to consider, of course, this may not be as much of a consideration for people with smaller holdings, but I have to consider the tax, I suppose. I can hold this in my ISA, and if it goes up, then I'm not paying tax. Whereas sort of holding Bitcoin outside the ISA, I'd be paying 20% tax on. So yeah, there's an advantage to holding that, but if we're looking at sort of much lower prices potentially, then yeah, you do have to sort of wonder whether it is worth it. As I say, this is sort of my realistic price of what I think they're really worth. If I'm relying on sort of people getting exuberant and sort of ignoring depreciation, as I say, sort of 60 million, 60 million or 600 million. Yeah, getting to sort of 20, getting you to $20. So basically, to get to 2.5 from where we are now, you have to sort of ignore some of the depreciation. You have to sort of go to, say, 40 price to earnings ratio. That's still only a 3x from where we are now. Really, I would be sort of wanting a 4 or 5x from a miner if the crypto itself is going to do 2.5x. So yeah, you have to sort of start going to higher reported net profit if Bitcoin on the balance sheet is increasing. So maybe $200 million. Yeah, that gets you to 40. Just sort of adding in a small section here before the end. Of course, the other consideration that I haven't had is maybe that 100,000 Bitcoin isn't the top, or that people are sort of expecting that it won't be. So yeah, I mean, you could add sort of say $120,000 Bitcoin as the top, and that sort of takes you to $18, already without making any of these other adjustments. If we were to go to sort of $150,000, yeah, you start getting up to 33 without making, any of the other adjustments that I sort of made. So, if you're getting really bullish at sort of $150,000, you start getting to 40p, 50p, yeah, you're up to sort of 6x, and, if it's like Bitcoin still going up, they'll be reporting, more on the balance sheet. You could get to $400 million, yeah, and you're at $100 stock price. But yeah, that is just sort of adding in higher and higher tops, where I was sort of always expecting to be selling out at sort of 100, well, between 70 and $100,000 Bitcoin. So to start wanting higher and higher prices to justify the stock price, then that's always a worry. But yeah, when you start having to assume that the general public is going to get irrational and sort of hyped up on it just for it to be worth it, then yeah, I do start to wonder. I'm going to be looking around whether any other sort of proxies, if you like, or other things are available, or if we get the ETFs. If we get the ETF approval and we can buy something like a BlackRock ETF, then I'm allowed to in the ISA, I may sort of switch to that. But we'll see. Really be interested in your thoughts in the comments, sort of whether I'm being too cautious. Maybe this is sort of more likely. People start, putting everything bullish into the stock, low depreciation, sort of Bitcoin itself going up, and then reporting a huge net profit. Maybe they're willing to pay 40 times earnings, 50 times earnings. Then it would be a 5x from here. But yeah, I'd be interested what you guys think. So leave your thoughts in comments below and like and subscribe. See you soon.